Welcome everyone to our channel Jadrzi over cryptocurrencies. We have new setups, we have microphones, we have cameras, so I can officially greet you. In this video, I would like to present to you the new features that we have introduced to our zone, trading zone. I think they are very useful and will give you a new perspective on the market. We'll also briefly discuss the situation, crypto, and where it currently stands. We'll talk about the potential impact of a possible war in Iran on all of these events. So I encourage you to keep watching, and now I can officially greet you. It's a pleasure. Well, I'm not a YouTuber, but unfortunately, I have to be one. So I think this is the best way to connect with you here. And the best way to present and demonstrate the functionality of our tool. We're also getting ready for live streams. We've already got everything formally set up, so I think we'll be starting in the next few days. As I said, we want to be completely transparent. Our tool is meant to be tested in real market conditions, so this will probably be the final test. Right now, we're constantly testing. We're in the middle of tests, and we have a 65% success rate on the fours. Now, after those drops, a few more candles have closed for us again. So we've surpassed the 65% success rate. You can find the posts somewhere here. Of course, I encourage you to subscribe and follow. That way, you'll always be up to date. On the daily chart, we have only one mistake. On the hourly charts, we're hovering around a 51 to 52% success rate. So the fours will be our main focus. And I think that's the optimal combination for reducing this market noise. As for the potential effectiveness of the trade here, of course, the daily chart is fantastic. Just one mistake, and even that one, I would call it a mistake in quotation marks. So we're very satisfied with how this tool works. All right, let's keep going. As for the present, well, the war in Iran, I think it was supposed to be a war lasting just a few days. Trump came out and said he expects 4 weeks of attacks. Iran is making threats. It seems to me that the market is currently in a state of anticipation. And that's one thing. The second thing is that we aren't seeing huge drops at today's opening. Somewhere, if we check crypto bubbles. On the hourly chart, it's a bit green, but the day is in the red. We'll see. So it seems to me that the only thing protecting eCrypto from bigger declines right now is this. It's that we've already gone through huge declines. For example, with Ether, we have some magic lines here, of course, and with Ether, we've already seen drops of about 45%. Obviously, there's still room for more, but that's probably the only thing that has protected crypto from bigger drops so far. Well, we'll see. From my point of view, it's better to let this play out. You'll see in a moment. I'll do a live analysis for you here using 4-day and 1-day candles from our Trading Zone Pro, and I'll also discuss the new features. All right, let's take a look at Bitcoin. 4-hour chart. Everything I do is available for you. You can purchase access to this zone. It's 70 Polish zloty on promotion, and this promotion will last for another 2 weeks. After that, we'll return to the full prices as soon as we prove the effectiveness to a wider audience after a few live sessions. So then, well, unfortunately, we will raise the price. So if you join now, from our perspective, since you're supporting us from the very beginning, you have this price guaranteed. And later, as much as possible, it will get more expensive. Of course, just one successful trade will pay for it. That covers the cost of this tool for half a year, so I think the price is still reasonable. We constantly compare it with other tools available on the market, and from my point of view, we come out very well, if not outstanding. So in the end, the real test will be the market conditions, which we have already simulated here. So now we'll simply do it on our official company account. We have a reset panel, as you can see here. We waited those 30 to 90 days to make sure it was at 0. So yes, this will be our starting point. On our website, lucramedia.com.pl, you will have access to the Telegram group. Access will be free for everyone. Binx is our official partner when it comes to such stock market activities. We are still discussing the patronage over the entire zone, Trading Zone Pro. So it's possible that if we manage to work it out, we'll be able to offer you these tools a bit cheaper. We'll see. Unfortunately, subscriptions are our only way of financing. So we have to finance ourselves somehow. We have to pay for servers, so it's only possible through potential partnerships. So access to Telegram will be granted to anyone who registers using our link. So all you need to do is go to the Lucrum website, media company. Here you have the links. Just click on the link. Here is our financial link. Register and you'll get free access to Telegram. Nothing else is required. You don't have to do anything else there. So you simply just need to register using that link. Of course, as part of the affiliate program, we will receive some benefits from everyone who registers, and we'll do our best to give back to you. Here, we'll be organizing various types of contests. We have quite a few plans. We'll be launching a whole futures zone, showing mistakes and using our experience. As I said, we're approaching this market in a completely analytical way now, whereas in the past, a few years ago, we approached it emotionally. I'm also a trader myself, and I managed to make quite a lot of money along the way. The channel actually started out as a trading channel, so if you go back to the beginning, you can see roughly what it looked like. So, based on my own experience and that of our team here, we simply tried to eliminate all those bad things. That means things like emotions, acting on impulse, or opening positions on a whim. We will try to show you all of this. Unfortunately, the market is a place that is designed for people to lose money, and you are also in a place where you are basically meant to lose money. So here we are, reaching out to help you. A hand, a shield. We're trying to prepare you a bit better for this. We'll see how we manage. We're taking a completely different approach than what's currently available on other channels and in the media. We simply, unfortunately, failures in this market, meaning bad positions, are a fundamental part of this market, so we will also make those mistakes. Our goal is simply to have as few failures as possible and to eliminate them. I also don't want these videos to be too long because this is the first one here with a camera, so I don't know yet how I'll handle it. So I apologize in advance. I don't know how the sound is set up, everything is still in progress, so please be understanding. I ask for your understanding, but I'll do my best to make it better and better, you know? So from video to video, I think it will keep getting better and we'll see how it goes. Alright, so let's move on to Bitcoin. We'll enter it on the fours, and as you can see, everything I'm doing right now, live, you can also do it live, right? So with one click, you download Bitcoin, and here I have it, probability, neutral trend, sideways movement. And actually, if we look at it, I would agree with that too. I mark and draw automatically, depending on the intervals. Here we have indicators, meaning whether they are neutral or bullish. The Garian grid is bullish, most of them are neutral. Market echo, so yes, as I mentioned in other videos, from this point 36.7, when the market conditions occurred as we have right now, when we clicked analyze, the price went up 36%, down 63%. So here, when it comes to the market echo, there is a greater chance that we will go down rather than up. Here you have all the indicators discussed at the bottom of the compendium. You can go through them yourself. And what new things have we introduced? We have introduced something called the current candle, which is being drawn because this is also, as I say, important as well. Our tool has a primarily educational value. So I simply think that each of us is a bit of a trend follower. Everyone has some emotions. I mean, some successes in this market, but unfortunately, because of emotions, greed, and lack of a plan, you simply lose in this market. So we will try to address all these. We have tried, well, we've gathered all those negative things in one place and we're trying to eliminate them. Because if we eliminate your negative traits and leave only your intuition and some experience, then things will look reasonably good. The first and most important mistake, we're trading on a candle that is still forming, which is number 4. For us, that will now be marked as the blue candle. So indicators are always calculated for a closed candle. So if you were considering the quality of a position, here we're in a trend. This is the 4th candle. We're in a neutral trend. So we observe. With a single tool, you can draw the channel we're currently in. So here we are. You have a tile that's at 43% of the channel. So we don't open a position in the middle of the channel. We wait. The market is waiting too. No one knows how this will play out. Here, the escalation could be enormous. Blocking the Strait of Hormuz is also a very crucial factor. So we're waiting on the market, and we can also see this reflected in the indicators. The market is waiting. If you go into the new functionality, we can draw the previous channel. So yes, right now, we are in this channel. Previously, we were in that channel. So this one is being drawn in real time, based on the last 25 candles, whereas the other one is the main channel that was present until now. You can use this as a kind of reference point, and we're in a sideways trend, so theoretically we play from the lower band to the upper band. It's the same here, so we're in the middle, waiting. Besides that, we've introduced a really cool feature. From my point of view, it's a small thing, but how does it change your perspective on the market? With just one click, because sometimes all you need is a change of perspective. Some people do well in a falling market, others in a rising one. So now, with us, you just click and you get something like this. That is, you have a complete reversal, as if you turned your phone upside down. You get it? And now, we can look at the situation we're currently in from a different perspective, as if it were an upward trend. So, okay, let's say you're playing now, we're in a downtrend. We set the perspective as if we're in an uptrend, and now you see we could calmly play for the rise on the double bottom, or rather double top, so that double peak, and possibly on the breakout of this zone, and then potentially a decline. So if we now return to real market conditions, here you have it shaded, showing you're on a flip, and here you have it as normal. So we can also expect some kind of decline here. A very nice feature from my point of view. Such a change of perspective when you don't really have an idea here or want a different viewpoint. Or if someone feels more comfortable in a bear or bull market, well, I think it's really great. So I always do this because I used to do it on my phone. Of course, we also develop these tools for ourselves, so we use them too. And of course, we also want to get as much out of this market as possible by using these tools. So this new flip feature, you have double channels, meaning the old channel, which is from 25 candles ago. The ones you have are indicators below the chart showing their maximum values, max and mean. Here you also have it, and the previous channel refers to the previous candles, meaning from 50 to 25. Because I think there's no point in setting up certain channels, since this market is so dynamic that it works very well. If there's a need for a wider range, we'll introduce it. For now, it's perfectly fine. We are satisfied with the effectiveness and with the tests in real market conditions, so for now, we're leaving it as is. There's always this kind of perspective: the current channel, the previous channel, and the flip. Here I have it for the chart. In addition, we've also introduced a feature for significant indicator movements. And now, if any of these indicators reaches such significant values, for example, RSI 6 moving from neutral, say from level 41 down to level 27, it's known that 30 is the oversold level when it comes to RSI, so in that case, we will inform you about it. How does it work in practice? When it comes to the fours, meaning we're in a neutral situation, but as for Bitcoin, these are the current market conditions. I'm recording this at 10 o'clock, so you have the charts from 10 a.m. Here you can set any date you want. I'll show you how to do that in a moment as well. So if we switch Bitcoin to daily charts, we're in a downward trend. Still, there is no confirmation yet. Here we have something like when the last trend change occurred. The last trend change for Bitcoin happened on January 28th, 2026. And since then, we've been in a downward trend. I'll show you in a moment here on TradingView. Maybe it'll be more visible there. So Bitcoin on the daily chart, the 28th of January. So here we have it more or less. January 22nd. As you can see, we're in a downward week. It's very good that when it comes to trend detection, our tool works. I'll show you in a moment. On other examples, for instance, on Ethereum, here you also have something like this trend will change. We have something called trend history, show history, which means on the 27th, it switched from short to neutral. On January 20th, from long to short. On January 5th, from neutral to long, and so on. You can go through all of this and see how it corresponded to the chart. And I have to tell you, we are very satisfied with this. Now then, significant indicator movements. So, the one-day Bitcoin, we are still in a downward trend. We have a kind of sideways movement here. Obviously, even in a downward trend, there are rebounds, just as there are corrections in an upward trend. It doesn't matter that when there's a correction in an upward trend, the trend will reverse. From my point of view, the trend is the most important thing for a trader, because if we know what the trend is, we know where to look for positions. So in a one-day downward trend, we look for short positions, that is, at the top of this channel. So at the moment, unfortunately, the indicators, and now the question is, are these indicators really that negative? Is it because this conflict was probably already priced in here? Or is it the other way around? Did the conflict cause these indicators to be so negative? It's very hard to answer that here. As that's why, as I wrote in the post, I suggest staying out of the market for a while. There can really be huge volatility. So, of course, with high volatility comes big profits and big risks, but that's not the approach we take. As I said, I'll make a series of short videos about futures for you, where I'll debunk each of these myths. The ones that are currently circulating in the market, like, for example, 100 plus 3%, right? I'll show you that the chances of that happening are practically zero when it comes to the futures market. Of course, I'm talking about futures, not spot. I'll show you that it's not at all true that you need some huge capital to make money somewhere, because all you need is systematic, simply good action. And I'll show you this with concrete numbers. So as I said, I'll debunk all these myths like turning $100 into a millionaire is not possible. I'll show you that the chances of that are practically zero. I'll show you how high leverage kills your position, even if you're in a good trend. Even if you've read all the indicators perfectly, high leverage will still kill you. It simply kills, in the sense, of course, that it kills your position, meaning you end up closing it at a loss. So we'll do all of that. We have plans here. As you can see, what we promise, we will gradually deliver. We're also a small company, and we try to do things with our own resources as much as possible. But I think it's okay. The most important thing is we deliver. We deliver everything we promise, so let's keep it that way. All right, now then, I'll show you how these indicators work here. So for example, if we take Ethereum and analyze it, so right now, here you have the probability, the trade. So here it's shown as a percentage more or less. Of course, the greener the bar, the higher the probability. This still isn't a guarantee of effectiveness, but if you have a good bar here, that is, the probability is okay, the direction is okay. You'll have the market's echo, meaning if such market conditions occur and you have a high probability, for example, let's say you're playing a short and the probability for a short is over 70% and you're at the top of the channel, then damn, I think your trade will simply be better, right? So a short here, when it comes to Ethereum on the 4-hour chart, we're looking at these levels 2000, 2080, possibly here at the 2057 level. We're definitely watching those channel caps and not opening positions in the middle. How will this play out? You can also trade automatically using our settings, meaning right now, when it comes to our tools, they always suggest to you, given the current market conditions, because that's how it works. It's for advanced traders, but also for those less experienced. Just copy these values. That's also how we measure the effectiveness of this tool, meaning, for example, entity now 1941, 100%, 2030, profit 1764 when it comes to Ether. These are ready-made settings. So here you have how much percent it is from the current price, meaning 100% to 4%. Take profit at 9.12. Taking into account all market conditions, all indicators and information, as well as the conditions of our calculations, our artificial intelligence, our algorithms simply provide these values. That's also how we measure the effectiveness of our tool, meaning if we first reach 100%, the position is a loss. If the first take profit is hit and it does not reach 100%, the position is profitable. And that's how we achieve 65% effectiveness and 83% on the 1-day time frame. So for non-advanced users, it's something like this. For advanced users, there's everything else. I think the tool is useful for both beginners and advanced users. All right, and what I wanted to show are these tips. Now, if we take a closer look, as for the assumption, so yes, here, it's a long trend, you get it, right? Long trend, short trend, long trend. Here, it might be a sideways trend, let's assume, we'll see. And now let's see what the historical conditions were. One of the main features of our tool is that we can go back in time, so to speak. We can check what indicators were present on February 24th at 9 a.m. So we go back to that, meaning February 24th, 9 a.m. We skip something like this, as you also analyze. You will get a recalculation of all the indicators as if those market conditions were happening right now at this very moment. So it's as if you launched this tool, you understand, on February 24th at 9 o'clock and clicked analyze. Now we're going back in time. Now you saw an alert like this, which is ETE. This is our latest functionality. Here you will get these tools so that you pay attention to this. And if you go to significant indicator movements, you'll be able to expand this. And here you have it explained. So here we observed at 5 in the morning. That is from the previous closed candle. Just as we're drawing here, this is 9 o'clock, so on this one. Calculations are always based on the previous closed candle. Significant indicator movements. So we noticed that there is a large increase in activity, meaning above average volume, 1.4. So these declines were quite rapid here. Our tool suggests a short trend, still a short trend, the direction and this. But here we already have the first extension. Let's see what happened at 1 o'clock. We have a second indicator, volume activity, returned volume. So we had here a lot of selling pressure. It returned to normal, but we're still in a downward trend. Let's see at 5 o'clock. All right, let's keep going. Sorry for these pauses, but it's quite a busy period for me. All right, so now we're going back here. If we have a downward trend, we were still in a downward trend. Here, after these declines, but now we have the first such expansions, meaning here it happened at 5 o'clock. On February 24th, there was a large volume, so we can suspect that at these levels, the interest increased here. Simply, people's interest grew. Now let's move on to 1 o'clock. I think these entries should be like this. At 1 o'clock, we already have something like this, meaning that at 9 we assumed the volume returns to normal, activity returns to normal. So here, we can assume that these declines more or less ended at this point. It's also the case that when we enter 5 o'clock, we're actually analyzing 2 o'clock because we analyze the hour. Of course, we have that hour marked, and you can see for yourselves how it looks later. Now we're analyzing this candle at 1 o'clock. As we look at the market at 1 o'clock in the afternoon, we can observe that there aren't any major moves or significant price fluctuations occurring right now. The prevailing short trend that we have been tracking continues to dominate the charts for the time being. Now we are going to jump ahead in our analysis to 9 o'clock, which in this specific context and time zone actually corresponds directly to 5 o'clock. And then look what happened. The divergence won out. This divergence was forming earlier, but we wait for confirmation. So with 2 out of 3, we inform 3 out of 3. That's already confirmation of the divergence. So we detected that here we are in a downtrend, but we identified a bullish divergence. So most likely, from this point, of course, it's always a probability, right? However, divergence is a very important signal, which is why I marked it in red. I'll even show you in the next video that I ignored it myself and how that turned out for my position. When I was commenting there, I was commenting on a different position, even though I had a large one. So now, not only did I mark it in red, but I also made a correction that if the direction is valid, then consider a position. If the direction is opposite, wait. So what do I mean? If we have a short direction, but the divergence is upward, we don't take a short position. Simply put, this can also be a bit confusing. Confusing, yes, from the point of view of the Polish language and syntax, but it's actually completely logical. There's also the case that if we have a main upward trend, we can also have an upward divergence. But yes, if we have a short direction, our tools suggest it, that is entry, stop loss, take profit, but we have a divergence, we don't take the trade. It suggests not to set up, not to enter on, well, because that's a divergence. A divergence is something like an anomaly, we could also call it an anomaly. So from my point of view, I would rather reconsider. Yes, as you can see, the market is already moving to neutral. I would consider long positions if there's a divergence. But as I said, we don't guess, we don't make guesses. We want to have a trend, we want to have real values. So if we detect some anomaly, we inform you about it here, and how it develops, we'll see. I don't know. Time 125. On the hours. Of course, all of this was detected earlier, but I also don't want this video to be unnecessarily long. This will be a series where we'll only be discussing this topic. Now we also have these additional functionalities available to us, and we are still going along with this current divergence. We can carefully observe exactly how this situation will develop right here, as the Shamatsman said. So looking at the timeline, this is 1 o'clock, and moving forward, this is 5 o'clock, just as we saw there. So here, probably this one. Now we have 2 new indicators again. So if we expand this here, we have, yes, a volume of increased activity above average volume. So yes, we have confirmation. As you can see, at first the divergence is detected and then it is confirmed. Once the divergence is confirmed, we absolutely do not go against this divergence. So we have a confirmed divergence. We have above average volume growth. So the 1.4 threshold is kind of standard. And we have upward moments. Because not only do we have a divergence, but there was also a change in Magda's direction to bullish. So from this point, this is of course the last candle. This was calculated for that candle at 1 o'clock at night, as you can see. And you have confirmation once the next candle is drawn. This is a great tool that actually allows you to learn how all of this behaves. So we always calculate on the closed candle. So you too, if you had run these tools at those hours, this candle would have been blue. Do you understand? But you already have the conditions from this candle. Everything will be calculated for this candle. So these indicators will also pop up for you just like here in this video. And now we have confirmation, whether it worked or not. This is an educational tool. It's meant to eliminate your emotions. You should gain your own experience. As we can see here with the channels, just like you see this current channel that was being drawn here. We reached exactly the bottom of the channel here. Of course, it is being drawn in real time. So here we have the previous channel as well, which is also an interesting piece of information. So now on this divergence, we moved up to the upper value of the channel on the 4s. Next, we have a short trend on the daily charts and most likely also a short trend overall. So now you could have played the divergence here on these candles, aiming for a bounce up to this channel. And now we'll see how it goes, but since we have a short direction, most likely we'll continue to go short. The only question now is, when should you open a short position? Of course, we're reaching the previous channel, meaning the one that occurred earlier. 25 to 50 candles. We're at the bottom of this channel and we're observing. We'll see how it behaves at 9 o'clock. So we'll get the indicators at 5 o'clock and automatically we'll have information on how they... Again, we got, yes, upward momentum, we've got that volume, high volume, there's a lot happening here. We'll clear these indicators so they don't keep showing up here. So it's like this, we've reached the overall value of the previous channel here. We've reached it and now we have a pullback from this channel. Let's keep looking. It's 1 p.m. I want to show you, like I said, these videos have to be educational. People need to learn. I need to learn too, somehow to learn. I wanted to show how I work with this tool, how to translate it into real market conditions. So that's exactly what we're going to present to you here. Next, we have a confirmed divergence. So in general, yes, if we're looking for short positions and we have a downward trend, let's wait until this divergence ends. So 5 p.m. I'll collapse this so it's not here. We saw an increase in activity again, with high volume at these levels. As you can also see, a solid breakout of this channel. This is the channel that was here, and now this is our previous channel. If I were looking for a short position, I would look around 2050 to 2064 at this level, meaning we reach this upper channel. And you understand, I went through this entire move with you. Here, we detected a divergence at these levels. One could have played at least for a return to the previous channel, the previous channel. You have it here. We assume a position at the top of the channel. As you can see, it has already changed here. I even missed the trend changed along with you when it switched. So this one at 1 p.m., whatever it was, at 1 p.m., which is 9, no, it was still short. So at 5 p.m., so we're analyzing for the previous one, it switched to long. And here we even got confirmation that at this candle at 1 p.m., the trend was long. As you can see, everything worked out. Everything was analyzed and detected very well. So now we had a downward trend, we had a divergence. Now we've moved from a downward trend to a long, we have a confirmed divergence. And that's what I was saying as well. We have a bullish divergence. So that also checks out. There can be a bullish divergence in an uptrend when a trend reversal has occurred here. So we could have caught this move here very nicely. And now, since the main trend is also short, the main one is downward. As I mentioned in the single line charts, you should first determine the trend for yourself, whether we are in a downtrend or an uptrend. So if the main trend is downward, we look for short positions. Of course, the best place to enter a position is at the main value of this channel, but let this also be confirmed by our indicators. So if we have a long trend, we wait until the long trend shifts to a neutral trend. We watch until 9 p.m. And now let's go through this entire movement. Of course, it's a bit long, but these educational videos are necessary. You need to learn. Now, the RSI has informed us that the market is overbought. So the market is strongly overbought. So if we now have confirmation from the RSI, we also have the channel. Right now, it's showing low values because it's long. If it were short, it would be showing higher values. So here we already have a high RSI. We also have this confirmed divergence. We'll see at 1:26 a.m. We're still in a long position. But now a new channel has formed here. The previous one. Now we have a possible rejection from this channel. We're on this candle, right? So here we have a rejection from this channel. We have the parameters for these candles. Echo market is already showing us, as you can see, that from this spot, so we're here. From this spot, there's a high probability of a downward move, over 70% down, 30% UP. All right, so as not to drag this out, we can draw the chart ourselves and see how it behaved from that moment. But that line disappears for us. First, because we uploaded those corrections and it ended. But anyway, we were somewhere around the 4 mark. Oh no, notice that it disappears for us now when we make a new chart. We'll fix that in a moment, of course. So 21, we were here, right? So how did we draw it in? The chart